Now for a check-in of the day's markets, let's go to Evan Lucas from InvestSmart. And Evan, plenty on the agenda for this week, including employment figures due out Thursday. And we've had some foreshadowing from the RBA governor that it might not all be too rosy.
Yeah, it's probably a very good way to put it, Annalise, in terms of what we're looking at. If you listen to the fallout from Friday, and Friday was quite an amazing sort of listen to having to the Senate committee, what you heard from Philip Lowe, what you also heard from his deputies next to him as well was, it is, as you said, it's not as rosy a picture as they were expecting. And the biggest takeout that I had from Friday leading into the answer to your question is that they don't see the unemployment rate falling below 5%, even all the way out to 2021. And the unemployment rate and where employment is currently sitting has been a major reason for them to have cut rates in June and July. And that is why Thursday is so key to now how you look at it going forward. So expectation on Thursday's unemployment figure is to see around about 5.2 again, with almost no movement. And again, watching the participation rate. Participation is at record all-time highs, but we just cannot seem to suck up this extra supply in the market to get that unemployment rate down. And what he's alluding to is that until we start seeing movements like that, there is clearly the opportunity to continue to cut rates. And a lot of people are now expecting further movements. The most bearish out there was actually Deutsche Bank on Friday, said that there could be 3 rate cuts by this time next year, seeing the cash rate at 0.25 of 1%. That's an astounding thing to be talking about, but that is the clear takeout from all of this, is that you cannot see employment going low enough to start seeing wages going up, to therefore back in inflation, to slow down this current rate cut cycle.
I have heard a number of analysts reference the fact that Switzerland has gone below that 0% rate cut and foreshadowing that it is possible. But what are the actual chances of Australia having that many rate cuts? Surely the government would be getting the message in that time that they need to be having a cash boost into the economy. Yeah,
the government getting it. The way to answer that part of your question is probably to turn around and say, once Josh Frydenberg can actually put his hand up and say, look, we've got a surplus, then maybe they'll act. But until that happens, I think they're not going to, inverted commas, act in terms of what you said there. So, look, I don't see it going to zero. Again, listening to what the testimony was on Friday, they see it as a very unlikely scenario, but it has to be there. It has to be part of their ability to continue to try and stimulate. And the questions that came from the panel, personally, I thought they were actually quite weak. They should have been really asking the question of, obviously we know monetary policy, what happens and what happens with it is asset prices increase. Now that's a major function of it. But does that happen in the wrong areas? What do they expect in housing? They got 1 or 2 questions around it, not enough. They are suggesting that housing actually isn't likely to sort of see the 2013 to 2017 rise. What they are thinking and are likely to expect from the consumer particularly is that they will start paying down debt. They therefore still have the ability to continue to spend, which keeps growth going and just takes general pressure off the overall household scenario, because that's the risk for them, is that we've seen a dramatic slowdown in household spending, a very dramatic slowdown in confidence. And on Wednesday, Westpac's consumer confidence numbers are out, and they are showing that exact figure, that the confidence level at the household sort of granular level is deteriorating. And that's where and why rate cuts are now coming as fast as they are.
And just before we let you go, markets have opened this morning, Monday morning. How are they looking?
Look, it's slightly weaker, which was what was forecasted on Saturday from our futures. Be aware today that actually there's a lot of Asian markets on holiday. So Japan, Singapore, India, Thailand are all away. So there is a little bit less amount of volume going through markets. Not only that, on Friday, US markets were pretty tepid, and they didn't really get the full force of what the president tweeted on Saturday morning for us here in Australia, which was we could even walk away from a Chinese deal completely. So as those markets come back tomorrow, as we sort of wake up and see how America reacts to that, that'll give you a better indication for the week. But tepid start, not surprised. Earnings season is well and truly underway. Earnings results have been fairly mixed. So unfortunately, I haven't got much of a read for you because things are, as I said, quite slow.